What a bounce here on the SPY, the S&P 500 index. If it's your first time coming across the channel, welcome. To all subscribers, welcome back. So here we are with the SPY pulling downwards and breaking the support of that open right near that 647.80 level. And in today's volatility, our SPY buy sent out a bear indicator at 12:20 p.m. and from that moment forward, from the 648 level, put options started to go up. The SPY went down lower. Full weakness now on 42 vision, hitting lows so far of 647.46, and put options went up nearly 150% plus within minutes to hours, guys. If you guys want to receive the clarity and edge that you deserve, check out the link down below in the description and top pinned comment to join the members using 42 vision and receive the clarity and edge that you deserve within the volatility of the charts and markets, whether stocks are going up or going down. So when we zoom out on the SPY, the S&P 500 index, we can clearly see a full transition here on 42 vision and a bounce back up that was pretty sharp to try to retest and get back over that 649 level, and it rejected. Now the SPY wasn't the only stock struggling to hold up. Tesla did as well. After running for 2 days straight, bouncing back up from 335 up to highs here of 358. And it rejected it, and a bear indicator popped up at 9:45 a.m. And from that moment forward, weakness within the charts dropping from the levels up here of nearly 353 to so far down here 345. And it turned out to be the home run of the day, beyond expectations. And if you guys want to know about these stocks early on and receive this clarity and edge, once again, check out the link down below in the description. And put options on Tesla went up nearly 80% plus within hours, guys. Check out the link down below in the description and top pinned comment to join the members using 42 vision, maximizing within the volatility and reaching and striving for these opportunities every single day. And you can become part of it as well. We want you to join us. Check out that link down below, and we look forward to getting you connected. So here we are with the SPY, the S&P 500 index. Going ahead and doing a full transition again from the dip area of white red borders back up to bright green bars. We were watching and we broke this all down in our last video on Friday, and we saw a full transition to the downside. We've come back up, and so far we've hit red bars. If it's your first time coming across the channel, this is 42 vision, which allows us to see the dips from the rips to the dips, and where the strength and weakness lies within the charts. And we also use our bull and bear indicators and inflow versus outflow as extra layers of confirmation, which I'm going to pull up here and you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we have the SPY under a bear indicator on the 15-minute since 648.35. Now, when you go ahead and zoom out and look at it from the 30-minute, no bear indicator just yet. And this is something crucial and important here in the rest of this volatility into the close and going into tomorrow, which we're going to break down. But in the volatility, yes, the 5-minute, it's under a bear indicator here. So far, the home run of the day to the downside. And then the 15-minute is just closing and confirming here in this bar. And in 1 minute and 30 seconds, this next bar will continue the weakness or try to reverse. But this bear indicator is in effect, and it's going to take to get back above 648.30 and break out even above that resistance here of 648.60 and turn back into a bull indicator to cancel this out. If not, this does have weight over the chart, and the question is, could it actually go ahead and roll that over into the 30-minute? Because if it does, we have here the 1 hour under a bear indicator since Friday at the 650.90 level, and the 2 hour is under a bear indicator here at 648.88. It's no mystery that when we try to get above it, any move to the upside is not justifiable. Why? Because these larger time frames have bear indicators, and if the lower time frames and even the 30-minute aligns, that weakness is justifiable to retest key support levels, as well as our inflow versus outflow if it follows, which you get connected to as well once you join to our 42 vision indicators. So the 30-minute is under a bull indicator, but right now we have inflows not following it, so we have a divergence here. These inflows need to pick back up and switch from red and cross the midpoint, and then you also have here the 1 hour with the inflows back above. So we have a bear indicator here on the 1 hour, we have a bear indicator on the 2 hour, and inflows are above the midpoint. So we do need to see these inflows switch from red to green though to justify the move, and we want to see those bear indicators get quickly canceled. Now on the 15-minute and 5-minute, outflows are below the midpoint. Whether they're fighting here in this volatility or not to put up a fight and try to retest resistance levels, outflows are below. And we have the same thing going on here on the 30-minute, but it is under a bull indicator. It's the only one out of all these time frames that we're looking at so far that's under a bull indicator, and it needs to get canceled to justify any further move to the downside. And if it does try to pull back up, well, the lower time frames are going to get canceled, inflows are going to pick back up, and that's something that we're looking for. And then we have the 1 hour and 2 hour above the midpoint. They just need those bear indicators to get canceled with the bull indicator, and now we have multiple confirmations. And to that I have to say, we may retest all-time highs and even break out above it. Now when we look at inflow versus outflow 2.0, which red is outflows dominating and blue is inflows dominating, right? And you could see that here. This turned out to be a pretty big resistance here because outflow started to accelerate and it pulled us downwards. We broke through that inflow level, which actually turned out to be the inflow level that pushed us up today, and it's been trying to hold that support. So for the bulls to really have any real strength here, they definitely want to break back above this, which is 648.60 levels, and then get back above the high of the day. And if it does, and bull indicators align and inflows align, well, this is the level it's trying to retest and retrace. And we look at that, right? Because we had these inflows pop up since Friday, and as we're trying to hold above these levels, especially 646, 645, the level to go ahead and retest and retrace is up here at 651 and 652, right? That's usually what happens. And this is where inflow versus outflow really gives us that edge, because we could see the flow of levels above the midpoint. With inflow versus outflow 2.0, we could see the strengths of supports and resistance and the strength of trend with our bull and bear indicators. Again, that link is down below in the description to get equipped and join us and receive that edge and clarity and know about these stocks early on. So we are trying to fight here at this key inflow level that pushed us up even further, right? Because this inflow level down here is holding up the chart. This one pushed us up towards 649, and here we are ripping back up, and it needs to get back above this outflow level. If it can, well, then we have the resistance up here, and then from there is the outflow level up here at 651. So that's going to be crucial. When you zoom out and look at it from the 15-minute, we could see here a big inflow level as well on Friday, and then up here the inflow level all the way up towards 648.87, and then the outflow level that happened today. If we can break through that, then we have the outflow level near 651, 652, and then in the bigger picture, we could see here how these inflow levels below the chart are holding up the chart, because every single one of the larger time frames, this is all being held up, and they have been used as support, right? Because we've retraced back down to the inflow level back on September 2nd and bounced back up from it, broken through inflow levels and outflow levels from previous history of the chart, and then now we're compounding here, and as long as we stay above 641, the bulls have a fight, right, to put up and try to retest resistance levels. And now we're up here at a key inflow level of today's pre-market between 647 and 648.60, and we want to see this breakout and get back to the highs there. And then zoomed in the volatility, this outflow level is crucial, which is near the all-time highs that we've seen recently. I look forward to seeing your thoughts down below, what you think, and what do you think the economic data this week will do? Is it going to stir up volatility, or are we going to continue to pump it up and go even further to retest new highs, and these inflows continue to stay above the midpoint, and then we also see the outflow level up here get retested, retraced, and probably even broken out of. As always, guys, thank you guys so much for watching, and let's make some money.